The stock market took a beating today, sending them to near-term critical junctures in technical analysis. Overall, we are nowhere better than we were 20 months ago, which is absurd because all of the easy monetary policies have gotten even easier over this period. Nothing has really changed, of course. We are still being told that the trade deal is totally, definitely, absolutely, probably, but obviously going to happen very soon. We are also being told that there is nothing wrong whatsoever in the US that's negative, and that all problems exist outside of the borders, but we'll just cut interest rates one time to make sure. Well, make that 2 times. Okay, let's expand the balance sheet also. My goodness. You came here for the truth, so let me unveil that for you. Today we're going to look at what happened in the stock market. I'm going to show you some economic indicators as well. I have a lot to discuss. I'm going to get into it right away or we're going to run really long. Let's begin by taking a look at the sea of red. You can see all across the board it was red everywhere. And it's not a different story than it was the day before and the day before that. We are seeing the same information all the time. It's all about the trade deal. It's all about the trade tensions. It's all about, do we have confidence that the Federal Reserve and the other central banks will act? They've already been doing some steps along this way. If you think about it, they reduced interest rates, they've expanded their balance sheets somewhat. We know what's happening. I don't understand why the market reacts in this way. It is completely obvious to me that we have computer algorithms controlling every little bit of it, and we are paying attention on a daily basis and pinpointing all of the lies that are clearly present. Take a look at the markets. On the right hand side, you can see that everything was in the red, focusing specifically on the S&P 500, Nasdaq, and the Dow Jones. The Dow Jones down 500 points on the day. It is moving to a very critical number, and we are seeing it approach 26,000 yet again. The S&P 500 down below 2,900 this time around, and of course there are always going to be levels at which the computer algorithms are trading at. There are certain psychological levels. For example, the Dow Jones at 26,000 or 27,000. That, of course, is a psychological level, but these computer algorithms trade at these certain amounts that we tend to see flash crashes, mini flash crashes, and certain events that happen, all because as soon as one of those computer algorithms triggers, the others will follow. Here you can see the moving averages, whether we're looking at the Nasdaq, the Dow Jones, the Russell, and the S&P 500. It has looked very bad in the short term for all of these markets. The Russell actually seeing the worst of it, moving down below its 200-day moving average. The rest of them move below the 50 and the 100-day moving average. So as you can see, on a short-term basis, this isn't looking good. But as I have brought up multiple times already, nothing has really changed. That's what's so interesting about all of this. The bull market is losing one of its most powerful backers. Corporate America's share buybacks, which hit a record of more than $1 trillion in 2018 on the back of a tax overhaul, have begun to slow down in recent months. Quote, total S&P 500 buyback amounts seem to have peaked while the share of R&D spending has remained constant since the financial crisis. And of course, this is what they've been doing. They've been able to push their stocks up to new highs and new highs and new highs. All along, we have seen the spending on research and development staying the same as it was a decade ago. That is not a good sign for the future of a company when they would rather put money into boosting up their stock than actually investing in the future. That's the way I see it. I know there will be a lot of people who disagree. If you own that particular stock, in the shorter term, you're going to say, I want as much of these stock buybacks to happen as possible. I want to push that up and I want to ride the wave. But if you think about it in the long term, you need to see these companies expand. And that expansion might take a decade. It might take longer. Who knows? And they might actually fail in the long term. You don't know. That's the whole point about stock investing. It's not a short-term game. It's not supposed to be anyway. Of course, there are different ways to play the game. The whole point is that if you are going to invest, you need to know what is actually actually causing this to happen. Number one, we have share buybacks that have been taking place, as it says right here, $1 trillion in 2018. Some have said that 2019 will see even more, but I will track that and I will give you the official numbers as they come out. All I know is that we are seeing a lot of problems today that cannot be fixed by everything that's been put in place so far, and that of course is with the central banks. But behind that, we see that they are able to finance these share buybacks because of what the central banks are doing. Most people don't know that. You can see a list of the stock buybacks. I have done a video about this before and only a few people have decided to watch it. I guess it's not interesting for a lot of people. In my e-course that is available here on the channel, I talk about all the basics about financial investments. One of the videos, of course, was this, talking about the stock buybacks, how to find it for yourself. I'm looking at Market Beat, and you can see the announced buybacks: Target, Microsoft, Oracle, Wells Fargo, and so many other names that I'm sure you're aware of in here. Massive corporations buying back huge percentages of their shares. You definitely want to follow exactly which companies are doing so and be able to pinpoint the insiders that sell right after this happens. Time and time again, they do so. September private payrolls report shows the pace of hiring is slowing. This was apparently the reason why stocks took a nosedive, but we expected this over and over and over again. How the report comes out, doesn't look so good, and then we get a headline like trade optimism and we erase all the losses. It is such a joke. In fact, when we get the government numbers, it will probably show something a little bit better and the stocks will love it. They only want to look at the good information. That's why people hate on me so often, because I'm willing to bring up that which they don't want to. Sorry, as far as I am concerned, the truth hurts. If you want to see the infographic or the data directly from the source, don't just go to CNBC, don't just go to Bloomberg, okay? You have to go directly to the source, ADP in this case here, the website being adpemploymentreport.com, link in the description. That's what you get when you come to the Money GPS. Yes, I might show you mainstream, but I also do show you the source directly. 99.9% of other outlets do not do that. Anyway, if you're interested in the infographic, check it out for yourself. Kroger is laying off hundreds of employees across the family of grocery stores it owns. This is part of what we have seen with all the store closures and the weakening economy. We keep hearing about it's Amazon this and that. It's affecting every industry. I'm really tired of explaining it on all of the videos I do, but just wanted to add to this, of course, because it is important. A lot of jobs are at stake. New York purchasing managers' current business conditions moving down to 42.8. All of these might not make sense to the average person. They might look at a PMI. They might look at some of these stats and think, well, I don't know what it is. It doesn't have anything to do with me. So let's move on. But you have to understand, when we talk about the economy, there are certain indicators that are so integral, so important for the person who wants to know what's happening for real to really pay attention to, okay? There are so many that I cover here on the channel. I only try to bring you that which is important. So understand that when we see trends repeating, when we see the shapes, the geometry of what is going on, we should definitely be paying attention. This happens to be just one of those. Speaking of New York, NYC housing prices in near free fall conditions mirror the recession era following tax hikes. Does that surprise anybody? People don't want to live in a place where they're being taxed, and then you add more taxes on top of it. What do you think they're going to do? Time and time again, they're going to leave. Many people don't want to leave, but they are forced to simply because their living conditions are not appropriate for them. And there could be a multitude of reasons why, but in this case here, we see that it is having a direct impact on the extremely unnecessarily high housing prices in NYC. There is more data in here. If you want to check it out, definitely take a look at this one. Manhattan resale home prices dropped the most since 2011 as sellers cave. You can see the chart here out of Bloomberg. I'm not going to get into this anymore. Just wanted to show you it because it was connected with the other information here. And this, as far as I'm concerned, is so terrible. And it's something that I talk about often, but most people, they don't get it. They're too busy keeping up with the Kardashians to know what is actually happening. Americans spent more on taxes in 2018 than on food, clothing, and healthcare combined. Now, all of these things, your food, clothing, healthcare, can add up to a lot. There is no doubt about it, particularly healthcare, and especially as people get older. You add on top of that food, which is a necessity, and of course clothing adds to the top of that. What we're looking at here is the most expensive thing that nobody seems to talk about, and that is taxation. Taxation steals from people every single day. If you own your own home, you got to pay. You got to pay to live there. How in the world did the public ever accept property taxes? I will never know. Income taxes, my goodness, that is even worse. You're gonna work a 9-to-5 job. You're gonna work and own your own business, and you're gonna go in every single day and work your behind off, and they're gonna say thank you very much, but for the first 3 months or 4 months of the year, you didn't earn a dime. Now, doesn't that sound real fun to you? How about a nice slap in the face? That's exactly what it is. For the first few months of the year, you don't get paid. But people don't think of it like that. Of course, that would hurt. That would really suck. They just take it off the paycheck. They just evaporate it. It's a big expense, and everybody says, well, what can you do? You gotta pay your taxes. Nobody ever questions why the taxes are there in the first place. The biggest mall owner in the US is going online. I thought this was interesting here. If you've heard about it for yourself, Simon Property Group partners with Rue Gilt Group on a new e-commerce platform. I just thought it was interesting. Wanted to bring it to you before I quickly just show you an update on the repo situation. On Wednesday's trading session, it was $42 billion, not quite as high as we have seen, and the anticipation is that it will decline again, but we must admit that $42 billion is a lot of money. It's still happening today. This is the chart since the 17th up until the 2nd of October. You can see how this has gone on. It's unbelievable, but the system is falling apart, and we are being told, no, everything is okay. It's truly unbelievable what's going on right now. I want to thank you for listening to my ranting, for listening to all of this. You made it to the end of the video, and I just wanted to say I really do appreciate all of those who stay until the end. If you found the video informative, hit that like button. It really does help this channel to boost me higher up in the search results. Thank you very much. If you want to learn how to make money online, how to build a business from scratch, to give you a step-by-step method in order to do so, I created a free, 100% free e-course called the Amazon GPS. Check it out at theamazongps.com. If you're interested in the financial education that was not taught to you in school, I am talking about the foundation, the history, the asset classes, how to profit from all of that. These 2 books have everything you need. Definitely check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. Hang on, hold on, don't go anywhere. If you haven't seen this video yet, and this is the one for you, click on it and I will see you there.